Welcome, everybody. It's Trader Tuesday. We're hanging out. We're having fun. We're shorting NQs. What else we doing? Building algos, and we're taking your questions. So let's hop into it. For anyone who hasn't been to one of these before, real quick, use the chat for general follow-up, maybe to a question, banter, comments, whatever. But hit that Q&A button if you want me to answer your question. So we've already got 3 questions in. We usually have about 30, so get them in there because we don't get to them all. And that's the truth. Answer live. Daru. Based on your experience, what is the average pace at what you scale your traders? I know it's different for everyone. I've heard firms being able to scale traders to 100K a month in profits in 1 or 2 years. Is this doable, or is it just marketing? If you get a rock star trader, it's rare, but if you get a rock star who is just really, really, really good, then yeah, it's doable. But in terms of answering your question, the first part, like, what is the average pace? I mean, everyone wants. The older I get, the more problem I have with average, right? Average is nothing. There is no average. We should focus on like what's maybe like a big distribution like that, like, but anyways, there are people who never scale, right? They don't make it. There are people who get scaled up and then run into a massive problem and get scaled down. There are people who are super, super, super slow about scaling. And then there are people who are faster. So what is average? I don't know, man. I don't know. But it is, most importantly, to answer your question, as you probably already knew, it's extremely unique. But no, getting people to 6 figures within a year or two, well, 6 figures a month. I mean, again, that's on the extreme side of things, but it's not impossible. It's not impossible. Hussein says, do you see LVNs and HVNs from previous RTH coming into play in intraday trading? I notice sometimes price just zips through LVNs. Do you see LVNs and HVNs from previous? So do I monitor them? Do I keep up with them? The answer is yes. I'm aware of those. I am first and foremost focused on these little type things here that you can see, right? Oops, it's all backwards. Distribution, okay, value, that's what I'm most focused on. But if we were to take this profile right here and make it a volume profile, you're probably going to see a couple of, that's what I always talk about, TPOs, simplify information, volume profile is more complex. TPOs have better value areas, volume profiles have lesser. The TPOs show you certain things, especially at the very high, low of day, poor highs, poor lows on a time-based thing. Volume profiles don't show that. So there's pros and cons all around. But in general, I focus more on the TPO main distributions, main value. But yes, I'm aware of, think about it. I focus on LVNs. There are no LVNs without HVNs, okay? So you don't have to focus on all of them. From a market mechanics point of view, the way that I see that markets operate, I focus on the LVNs. So am I aware of them? To answer your question, yes, I'm aware of them. Is it part of my like official prep every single day? I come in and I really like draw and highlight where the LVNs were from the prior session? No, I don't. But am I aware of them on more so like a weekly basis? If there's some key ones I want to be aware of outside of just the general weekly value, yes. When the prior day doesn't have a really good distribution in terms of market profile, I'll look to the volume profile for a little more clarity. and kind of not worry about standard value and look at more kind of individual distributions. Ryan's asking me, when is the intensive? Ryan, I was going to ask you the same thing. I don't know, man. When did we say we were going to do an intensive? I don't know. Do you know, or are you just trying to remind me to say it? Because I need you to tell. I need you to tell me when we're doing it. I think it was maybe the last week in October. October 24th through the 28th. Just real quick, and you guys know I don't waste time with these things. I just answer your questions real quick. We're going to plug the intensive. I've done what, 3, 4 of these things now since starting Apteros. They are loved. Go ask around, right? It's just, it's a rare thing to be able to truly see what a really good trader does from before the market opens to during that morning session and watching me execute trades, seeing the fills on the charts, really, really seeing what I'm doing. And then to spend almost the rest of the day, right? A couple meetings, like an afternoon Q&A to get all your questions answered, an end of day recap to hear me talk about what did I see that day? What did I do well? What did I do poorly? Maybe towards the end of the week, do like a weekly review, all these things that you need to be doing and getting really good at, you're going to see me do. I have never had a complaint from anyone who sat in on an intensive. In fact, people sit on multiple. We have repeat students in intensives because the market's unique, right? It's a new week. You get to see new things. All right. So if you be on our email list, follow Apteros on Twitter, and you'll find out more about that. How to get, if you have any questions, obviously reach out to support@apterostrading.com. Let's get back to y'all's questions. Rafi, what's up, brother? Hey, Merritt, I think I find a style or niche within NADRO that works for me based on both my results and what feels psychologically most compatible. I've found success being quite highly selective, choosing only to focus on fresh, high-quality, narrative-driven plays from quality trade locations. Good for you. And essentially ignoring anything of lesser quality. My question is, do you think I'm being too selective if I'm not putting on trades in every session? So that was one sentence there. Sorry. Do you think I'm being too selective if I'm not trading every day? Or is this a legitimate, logical, stylistic choice and approach to take? Would be great to hear you talk about highly active versus more selective NADRO style. Great question and good for you. I think the fact that you're saying that you think you found something that's really compatible for you, I think that it's important that you listen to that, right? I appreciate you asking me about it and my 2 cents. But most importantly, you seem to be very much at peace with it. And I know that there's always this thing, I think a lot of times in the back of our mind, it's like, I should be doing more. I should be doing something, right? Maybe you land there, but I think right now, if you're really settling into something that you feel like really fits for you, don't mess with it, right? You don't have to trade every day. It's no big deal. I think we've seen several students in the community. You could be added to that list of people who have found success with loosening up, widening some stops, but then clamping down on the selectivity side of things. I think it's a big deal. So go for it. And then continue to monitor markets, continue to be a student of markets, continue to build out your playbook. And then guess what? It's going to feel right. You're going to know the time is going to be right to add that next thing, whether that's some scalping on here or there, whether it's more markets that you're viewing or following and trading. So therefore you start to expand that sample size. but just ride this thing for now is what I say. Really, really stick with this as long as it's comfortable, as you're saying. Christopher asks, do you use confluence between markets to facilitate trading decisions? Not to make trading decisions, but potentially add confidence. Example, periods of inverse correlation between the dollar and the S&P. No, I don't. I'm not going to bash anybody who does. You know, if you're kind of have a good macro perspective and you're aware of like kind of what's leading things or what's not, to me that stuff's not dependable because those relationships are always in flux, and what was highly correlated, what was leading and lagging, breaks down and changes. So I'm not a big fan of it, but I'm not going to say don't do it. Yeah, it can certainly be something that becomes a part of your process. Sal says, do you put more emphasis on NQ CVAs versus ES CVAs? If so, which do you think leads? Again, I don't think either leads. I don't think either is more important. I take every market at face value. What is it telling me? What are their opportunities, if any? Do we have a CVA here? What does it look like? How many days is it? How good is it? Where are we relative to that in terms of acceptance? But yeah, you to bring Christopher's question and Sal's question together here, I think that you can sometimes look, this is not something I do regularly, but I think that it makes sense that if you're really bullish, let's say the S&P, and maybe the NASDAQ is not confirming, let's say a breakout of a CVA and really getting held up, similar to kind of something example you're talking about, then, maybe there is lower conviction in that idea for you. It's just not something I'm in the habit of doing. All right, we're a quiet crew here today. Last question I have, so we'll wrap up after this unless you guys have more questions. Matt says, does anyone at the firm trade options on futures? Or do you guys solely trade futures? So at the moment, we don't have any options traders, but I have a couple of students who've gone through advanced group mentoring that have shown that they're really good at trading options with a NADRO framework. And I'm looking forward to those people developing into future leaders of an Apteros options desk. I have another trader on my desk who is a really good analyst. They're really, really good at identifying, I'm bullish this market, I'm bearish this market, but they have not proven themselves in terms of being able to trade it yet. They've tried a couple different things. We've had some success with stuff. Nothing is stuck. This person who I believe in is really going to make it and really going to be one of the top traders for Apteros. We're looking at moving to options for them to, again, reduce the path dependency upon them being profitable or not based on having good ideas. But know that currently we have 0 people. We're looking at immediately putting one person in that space, and I'm looking at a handful of people that I want to continue conversations with and get them on board with that. Oh, did I just not scroll down? We have like a lot more questions here. Maybe you guys just put them in. Hey, I'm on a webinar. Wife's bringing me lunch. Okay. Renault says, scenario, we have NADR opportunity. Well, I'll take that, Dr. Pepper. Okay. Scenario, we have NADR opportunity with a good narrative. Oh, Feels so good when it hits the lips. We're just waiting for a momentum shift to pull the trigger. A news, say ISM manufacturing PMI is going to be released. The news creates the expected momentum shift. Would you take advantage and jump into the trade, or do you consider it would be better practice to pass on that opportunity since the market can be choppy after a news release? So great question, Renaud. Yeah, this show brought to you by Dr. Pepper. This is a good question because a lot of times, as we know, news releases bring about horrible whipsaw, back and forth, stop runs, liquidity clears in all directions. It depends on the setup. It depends on the, I don't want to say conviction, but let's just say the quality of the general trade. If you have a really, really high quality, great trade location, fresh condition shifts, confluence across time frames, blah, 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 I think it's worth it. What's the word? What's the word where we have the relationship, guys? Some mentoring students, if you're here, you should know this. The inverse relationship, or, you know, or it depends on how you want to look at it. What's the relationship I'm about to talk about here? Strength of narrative is one variable, but what is another variable that I'm going to talk about the relationship of, Tanush? Compromise, which is a form of the word I'm looking for here, jabronis, is aggressiveness. When we have a really, really, really good idea and the stars are aligned, we can be more aggressive, which may lead to, yes, Renaud, some conviction, which may lead to, yes, Tanush, compromising an order flow read, perhaps. But it's a form of aggressiveness. I think that really should sink in with everyone on this call. If you have a really, really, really good idea, it's okay to be more aggressive. And aggressiveness can take various shapes and forms, as we just covered. If your idea is borderline, maybe a B or a C idea, you don't need to be so aggressive. You don't need to be compromising things. You don't need to be aggressively re-entering on every blip. You know, you need to really back off of those ideas and make them come to you. So back to the question at hand here. If news comes out and things are flying around and I've got a really, really good trade, my take is that I tend to be aggressive where I deem it's appropriate. And that would involve either holding into news or aggressively re-entering as soon as the announcement comes out, things like that. So it's a more important conversation, I think, to the overall group. I'm happy to answer Renaud's question, but overall, it's really important concept there for you guys around being conservative, being aggressive, where that's appropriate. NADRO gives us a good framework for understanding when and where that's appropriate. Christopher, can you describe a tough trade you found yourself in and navigated your way through? Almost didn't ask this because I assume it all gets back to being rooted in your process. I mean, look, I'm as human as the next guy, right? I struggle. I have, you know, difficult trades. I'm currently in a trade right now. I'm short in Q from 11,653.50. I tried to trade a couple times, and then I saw what I really felt was the top. Felt capitulatory. I saw something on the tape. I alerted my desk to it. I said top in Q. What's the timestamp when I said that? 9:44 a.m. my time, Central Time. So 9:44. So that was indeed the top. It looks like we may have revisited that and touched it. That high was at like 9:43 and 57 seconds. It looks like we may have touched it. I don't really care, but I don't think we went above it by a tick. So it was the high, but I'm getting to my point here. I'm not trying to brag about calling the top today. The point is, I tried to get into this idea, took me a couple shots, and then guess, you guys tell me, somebody look at NASDAQ, right? So I'm short from, you know, I'm not going to pull up my fills or whatever and take the time, but essentially from I was probably short at like 9:43 or if I can remember. Where is the chat? In Q talk. So yes, it was at 9:44 when I said that to the group. So probably, you know, 9:44, 9:43 is when I'm short from. So guess what? Is that an easy, free-flowing trade? I think I just gave you the answer. What was that trade like that I experienced? Go find a NASDAQ chart. 9:43 a.m. JM says 90 minutes of choppiness, right? How good are you guys at handling 90 minutes of your trade not working? Of it continuing to look like poor high, you're toast, you're dead in this trade. It's going to stop you out. How good are you at doing what I did? And I am rewarded for it. You know, 5-figure trade. I didn't start scaling out until 11,605. I'm just ballparking these because I'm looking at fills. 11,598. I scaled out some at 11,574, 572, and then I scaled out one at 11,540. Obviously, it's retraced since then on the you know, 20% of the position that I'm still holding. But like, so JM's saying, I really like to know where you found the force to hold so long. Let's talk again, students. What force have I found? Let's talk about it. I'll wait. I'll hang up and listen. Time in the saddle, Kulu, just is, it's not the force that I've found. I like the way JM phrased that. Yes, Beverly, I had a stop placed. I still have a stop placed. So it's time in the saddle, Kulu, is not the answer. That is what may have allowed me to get reps in and experience in to be able to find things. So let's see, what else are people saying? Matt says, understanding your reward is much greater than your risk. I think that's good, right? That can help you stay the course on a trade, right? Joe gives probably the biggest one here, which is your process, right? So having a trade management process, having a set of variables that actually say, here is when and where, based off what exact information on what exact charts tell you to stop out of the trade, scratch the trade, add to the trade, scale out of the trade. What is it? Right? Reading the tape can help. It can be a part of the variables for that, Sal, but it's not the answer. Tanush says, one of my quotes, my process is a better trader than I am. So no matter how scared I got, you know, and I can tell you a couple times I put my hand on the keyboard for a rapid fire, cancel my stop, and bang out of the trade. I put my hand on the keyboard a couple times. but the market never did what I needed it to do to get me out. So I stayed the course and I got rewarded. Yeah, Flary says knowing you weren't wrong yet. And that goes back to kind of my point here, which is around, I know what would cause me to say I'm wrong, and that didn't show up. So did I have to deal with the market not cooperating for 90 minutes? Yeah. You know, I was early, I guess, right? Like, to me, it's random, right? Yeah, I was early in the sense that it didn't just like go directly in my favor, but I mean, I shorted near the high of day. I mean, which is something guys, something is weird with NASDAQ, by the way, because I am doing this a lot. It takes me a couple tries, but I have been buying bottoms and shorting high of days, low of days in NASDAQ, and I'm not even trying to, I don't know what's going on. It's a little weird. So I've been trading almost exclusively NASDAQ for a week or two here. I did the same thing. I think it was late last year. I forget when it was. I remember volatility was high. Here's what I'm kind of finding out, a new thing about me. I think, what did my wife bring me for lunch? Ooh, Panera. I got some broccoli cheddar soup. I got a little, probably that, what is that? That Chipotle avocado. Am I ADD? Here we go. The thing that I'm finding out about me is I think I really like trading NASDAQ when volatility is elevated. That's one thing that I think I'm finding out. Okay, we have about 50 questions in here. I'm sorry, we got about 5 minutes left. Does NADRO work for other markets outside of futures? Yes, it does. The thing that NADRO, the full NADRO would require would be that O order flow. Not all markets you have access, such as like, you know, some crypto stuff. I'm not deep into that, so I can't tell you. I know some people are getting a better, you know, feel for like actually seeing order flow in crypto and stuff like that. 6 months ago, a year ago, that was extremely, you know, I don't know, whatever. I'm talking outside my out of my lane here. But the point remains that if you're going to get the full NADRO with the order flow component, you have to be able to read order flow of a real market. Now, can you trade NADRO without the order flow component? Absolutely. It is good enough on a standalone basis to do it without order flow. And in fact, some of my students, even some on the desk, don't really keep up with order flow. The way I teach order flow, it actually doesn't really work in all markets, right? For example, currency pairs like the euro futures, that order flow is whack. It is bizarre. What do you think, Flary? Are there markets that just order flow is just not legible, let's call it, for you? Let's Matt, what's up, brother? Says yes, Flary confirmed 6E is definitely whack order flow. Is there any way to generalize how those successful with NADRO and options are implementing them in strategy? How do they structure the trades? I mean, I think a lot of them are doing it quite simply, right? Some of them are kind of really into like the zero DTE stuff and kind of really like kind of being aggressive with risk reward, let's call it. But so most of them are doing shorter dated stuff, right? It's not like they're doing a 90 DTE thing, you know, or 60 DTE. It's typically like weeklies, that kind of thing. A lot of them, most that come to mind are spreading. Some are just doing basic long options. I know of no one other than me that predominantly writes options. I like to sell them. I love it. When I'm doing that strat, I don't get to sleep much, which is seriously a problem with that strategy, because anytime the trade isn't looking perfect and away from my entry in a profitable way, I'm at the screen actively delta hedging with futures, and so it's a little annoying, but it really works well. So that's Matt, what I'm aware of in terms of NADRO options traders. I would say the bread and butter that I see most people is basic, shorter dated verticals, and they're just, some people put a twist on it based on a view on vol, which I know you know all about. Robin says, regarding Apteros tryout, after successful completion of it, what's the process to join the desk? It's pretty simple. We just onboard you, get you a sub account, and understand, get on the same page in terms of risk and products and what you're looking at doing. I begin the process of understanding your trading so that I can be there for you. Accountability, all that kind of stuff. If you're a NADRO trader, we have a team for you. If you're everybody else, kind of on some islands there, we're kind of doubling down on our people, our NADRO folks. I have traders who are not NADRO, and that's great. That's fine. They still, they send me daily reviews. I'm very much aware of what they're doing and how they're doing, and help them how I can. Templa, hello, I have a question. How am I supposed to take a trade if I've established my higher time frame VWAP weekly and monthly is bullish, but the yearly is bearish? I can't answer that question for you, man. If you're, or I shouldn't say man, I don't know your sex. If you are in our community, ask that question in our community. You're going to probably get some good feedback on how to structure ideas, how to handle dissonance, all the things we talk about in the course. Kulu says, I know Kulu's a man. What's up, man? Good afternoon, Merritt. There are a few measures of value: VWAPs, volume profile, market profile. Could you please explain why you chose VWAPs, market profile versus VP? I believe you used to use VP on weekly charts in the past. Why did you switch simplicity? So yeah, let's bring up a drawing board here. Let's draw. So value, we have MP, VP, and VWAP. That is market profile. It's based on time and price. Volume profile is based on volume over a periodicity. All these have periodicity elements to them, which is very important because we're defining value over a period of time. This one is time. This one is actual volume. This one is this one is math. It's volume and over a period of time, and then how much variation we have around that mean, if you will, of the volume weighted average price. So let's just call it math. Okay. They all have developing and they all have prior, right? So developing value and prior value, all of them, right? We begin a day and then we have the first 30 minutes, and guess what? It has a value area, right? I guess maybe not. Once we have two, it definitely has a value area. And then we have a third bar and it has a value area. And we have a fourth bar and it has a value area. And we have a fifth and a sixth and a seventh bar. And we end up with the day's value area. Okay. We find the most traded price. In the case of market profile, it's the most time spent at a price. And then we look for essentially 70%, right, above and around that most traded price, let's call it. and that's the value area. Volume profile is the same thing. It looks for the most traded price, the most volume at a single price. Let's say it's this one. And guess what? It develops, just all of these was kind of my original point here. They all develop throughout the session, and they all end the session and can be used going forward as prior value. And I could say we started a VWAP here as well, right? It would look something similar, right? VWAP being the mean, the standard deviation, bands around it being the value. I think that I'm a fan of market profile for prior value because it is simple. One of the beauties of this tool is that it's simple. It simplifies complex information rather than providing you more information that will typically do what? Confuse us further. It simplifies information. It's to a fault, but it's not a fault, right? Volume profile, as I mentioned early on, it's more granular. It's going to have more levels to look at. I don't think that I've never been a fan of points of control, really. Volume points of control. Some people really focus on the VPOC. I don't find it tremendously useful. I think price action is outside of rare. We have one law of market dynamic that deals with this, how markets move. Outside of those rarities, price is messier around high volume areas. So I'm not that interested in high volume areas. I think VWAP does a really, really good job. I think that every single institutional algorithmic desk, they all look at VWAP. And so it's almost like a self-fulfilling prophecy why it's so good at developing value. So now you're seeing my choices here, why I like these and why. Volume profile, I think, is kind of like another thing. And that's if we need it or want to get more granular in some of those HVNs and LVNs that we started off the conversation with. I think volume profile value area is one of the weaker ones in terms of prior value. I think that VWAP, whenever you have a day that's a trend day and you have your VWAP, the trailing side, in this case, the lower side, development value area low, because volatility is there, this band is wide. And guess what? This trailing side, if price is going up, the lower side, this value area low is crap. It's too low. It should be hugging where, and guess what, guys? Anytime you try to attach value to where there is no balance, that's a fool's errand. First, we find where there's balance, and then we measure value. All right, guys, check us out at apterostrading.com. Thanks for being here. Thanks for your great questions today. Enjoyed it. Go have yourself a Dr. Pepper, and we'll see y'all next week. Cheers.